All right, welcome to the weekend video. This is Enda here. This is for bullwaves.org. I represent the conglomerate that is bullwaves.org. It's me, myself, and I. And I want to go through the markets. This is a weekend video update. This is Friday. It's 23rd of December. Happy Christmas to you all. Pray the blessings of the Messiah upon you and all your family. And for now, for the Christmas and for into New Year also. I want to thank you for joining me in this video, and hopefully this will at least be interesting, if not maybe even useful to you. Okay, so I'm going to go through the markets from a kind of a technical but an Elliott wave perspective mostly. So it's a patterns-based analysis basically, and you'll see what I'm getting at. So tuck in, get yourself a nice cup of coffee or a cup of tea or whatever, and let's get on the road. Right, this is Eurodollar. This might be a long-winded video. I'm sorry if it is. Click forward to the relevant video that you want to see, the relevant part that you want to see. If you look along at the bottom here, you can see my charts. So I have them all laid out. This is the way I work my MetaTrader. So I lay out all my charts at the different time frames. So I go from euro dollar to pound dollar to dollar yen to Dow to gold, crude oil. So you can see that's the sequence I use. It doesn't change. It's just the way that they're laid on my MetaTrader. So that's the way it works. Okay, right. This is 4-hour euro dollar. You can see that I'm tracking 5 waves up. You can see that in the 5th wave here, I'm tracking an ending diagonal. And the reason for that is the overlapping, it's 5 waves, but it's an overlapping nature of the 1st and the 4th wave. And internally, you can count 3 waves within each wave. So ending diagonal, that suggests that we have completed wave 1. I'm not quite sure yet, but it does suggest that we have completed wave 1. And we are about to head lower in wave 2, excuse me. And that'll be wave 2 in green. So I would expect at least a decline back towards the 102 level, previous 4th wave. You know, we might get back towards, we might get back towards the wave 1 low, so that'll be about 99. We might get back to power again in wave 2, but I do suspect we'll put in a higher low, a significant higher low, and that will lead to a larger rally. Okay, so here's the hourly count. You can see here's the wave 1 top. You can see that I'm tracking. It was a let's say a challenging, not challenging, annoying trade this week. It was basically sideways, basically ranged. It had all the hallmarks of a B wave, so I'm suggesting that this is wave B within wave A. So we have 3 waves down in wave A, and all this week's trade was basically wave B. Yesterday, on Thursday, we came down out of that wave B, and we met the minimum target for wave C, which would be a break of wave A. So we have, technically, I suppose you could say that we've already completed 3 waves down, but I would suggest that we'd fill this channel down. So we have 3 waves down to complete wave A, and I would suggest that we'd probably hit the previous 4th wave, so that'd be 105.10. So come down in 3 waves, hit 105.10 before, correcting higher again in wave B, and that would be wave B of A. So if we are going to go down in a second wave, it might be a long drawn out affair, taking a month or so at least, I'd say. So let's track that. Next week's going to be a short week. I doubt there's going to be much going on today. I'd say even when the US opens, we'll see. But it looks like we're heading towards the 3 waves down in wave A anyway. By Tuesday, because Monday is going to be closed in Stephen's Day. So I'll be back to you probably Tuesday evening. Here we go, 3 waves down in wave A. That's what I'm looking for early next week anyway. So let's move on. Here's cable, pound dollar. It looks like we have 3 waves down done. What am I running with on the hourly count? Yeah, close enough. Close enough to 3 waves down done. I'm not sure at the actual degree here. Maybe I'm 1 degree too low on this. I'll have to double check that now over the course of the next couple of days. But it looks like we're coming down correctively anyway, and we may be beginning this B wave down here. So we don't have enough action yet to suggest that this wave A is done and wave B is underway, but or enough to confirm it, let's say. But we do have enough to suggest that that's the case. You can see that wave A of 2 rallied back into the previous fourth wave price territory. So I was suggesting that we get back towards 120 to 22 or 25 or somewhere like that in wave A, and that's where we've gone. I do think that we'll probably go higher as wave 2 completes. I think we'll probably get up around 130 or 35. But I do think we've done 3 waves up, and we should probably expect some sort of a consolidation, maybe back towards that B wave low. So maybe back towards 112, 111 to complete wave B. We'll see how it goes. I'll go to the hourly count here. So you can see wave 3, 4, and 5 completed wave C of A. That is a pretty choppy action in general. So again, we have a pretty bog standard, I think, although a little bit choppy, a pretty bog standard ending diagonal pattern. So we've got wave 1, 2, 3, 4, and 5. We came down pretty impulsively off that as well, and we broke the previous fourth wave low. I'm looking for wave A, possibly put in one more low, maybe get back down towards 119. I was suggesting between 120 and 119 for wave A to complete, and that seems to be where we're heading right now. It looks like wave B created a triangle here early in the week, and then it looks like we could have another ending diagonal within wave C. So it could be 5 down in A, triangle B, and then 1, 2, 3, 4, 5 down in wave C. The kind of trend overnight was to kind of correct higher in most of the markets that I follow. So it's the same here. I do suspect that we're gonna see one more stab lower into 119 to complete wave C of A, and then we'll track higher probably towards the middle of next week in wave B of A. So this is, I know it's kind of confusing, but we're working on 3 waves down in wave A, and then 3 waves up in wave B. So it looks like the trade will probably be pretty sideways before we kind of fall sharply in wave C of that B. So I'll show you there on the 4-hour count. What I'm tracking right now is wave A down. Then we'll look for wave B up, and then wave C should come along probably middle of January sometime. So we'll fall sharply in wave B, and then obviously the tide will turn sentiment wise, and people will go completely bearish on cable again, and then we'll be set for a rally up in wave C. So in my mind, it looks like we're going to be corrective sideways to down over the next month or so as wave B kind of holds on to this price. Okay, for the moment anyway, next week looks like we finish wave A and we track higher slightly in wave B. Okay, right. A sharp move lower this week in dollar yen has kind of brought forward the count a little bit. I was looking for a higher kind of retracement in wave B. So I knew we had wave A most likely done. And I was looking for this kind of 3-wave track up to about 135, 140 to complete wave B, and then I was looking for wave C down. But it looks like we've come in kind of a little bit heavy on wave C and a little bit early on it. There is an alternate account for this, but I'll show you that later, I suppose. Well, no, I'll show you now. This could all be wave A down, so it could be a 5-wave pattern down in wave A. I haven't ruled that out completely yet, but it's going to depend on how the reaction is of a new low in wave C here, or a new low that's coming our way pretty soon. I'll go into wave C here and I'll show you what I'm thinking about here. So we've got wave B done, that kind of tight 3-wave pattern here, and then we've got wave 1, 2, acceleration lower, wave 3, small correction higher in wave 4, and then early next week I'll be expecting a decline back down into wave 5 again. Minimum would be a break of 130.50 again. Probably a stab below 130 again would be enough to complete wave 5, and then we'd look wave 5 of C, and then we would look higher to begin wave 1. Now, if the alternate count is correct, then this is only wave A down, and then we would look higher in wave B. So both instances, alternate and main count, would suggest that we're probably going to see a rally pretty soon once this 5-wave pattern completes. So that's what I would be looking for. Okay, here goes the Dow. We had a nice sharp turn lower on Thursday, and so far today a kind of a corrective bounce overnight and this morning in the futures, US futures anyway. We do have a larger pattern, back to, let's say, the larger pattern here. We do have a 3-wave expanded flat complete in either wave 2 green or wave 2 blue. It depends on what, let's say, what degree you want to count the previous pattern. You know, it's up to you. I think the outcome here should be the same. It looks like we have 5 waves down, done, and we're either in the middle of a second wave lower high, or we have done that second wave lower high, and I'll show you that in a second. So this week's action was, let's say, anticipated by the momentum that had been happening, let's say, over the previous month. We had gone sideways, spiked to a new high, and that declining momentum was suggesting that we were going to see a reversal pattern build pretty soon, and we seem to have that in play right now. So, hourly count. Let's get into the hourly count. Sorry, forgive the pause. It looks like 5 waves down. Oh, sorry, 1, 2, 3, 4, and 5. There's a few ways I can view this, but at the moment, it looks like 5 waves down at, let's say, 32,640, and then maybe 3 waves up in A, 3 down to a new low in B, and then a nice rally in wave C, probably a 5-wave pattern in there. So that does complete an expanded flat correction. We topped out below the 38% retracement there. You can see probably about 100 or 50 points below that second wave, or sorry, that 38% retracement in wave 2. Now the alternate count here would be that we have wave 1 complete at the extreme low, and now we're working on wave 2. But the, let's say, the sharp nature of the decline here does suggest that the sharp nature of the decline does suggest that it's a wave 1 and we have a wave 2 lower high here. Right, if this is correct, if wave 2 is correct, then wave 1 and 2 and 3 should be, wave 3 should be underway right now. And that'd be wave 3 of 1 of 3. So let's get down here and I'll put that in place. That'll be wave 3 of wave 1 of the larger wave 3. So it does suggest that we have a pretty serious decline coming our way. Something to match the pretty serious rally that we had. Something to pretty much wipe out these previous rally we had. So wave 1 here should probably push back below 30,000 again. So watch for that, in a bear market coming to you pretty soon. Okay, if wave 1 and 2 is done, then we should have wave 3 of 1 coming our way next week. Alternate count, keep that in mind. But for the moment, the action that happened on Thursday and today so far is suggestive that maybe wave 3 has already begun. So let's keep an eye on that. But just keep the alternate view, in your peripheral vision at least. Okay, so let's move on. This is gold. Let's say a possible. I think what's happening here is something pretty similar to what happened in the stock market over the last week or so. You can see that declining. This is a 4-hour count here, so you can see the declining momentum on the 4-hour count is suggesting that something, wrong is going on here, and we are turning and cresting a top here. So whether that, you would suggest that the power of the recent declines suggests that the momentum is turning to the downside again, and that is what is bearing true, or that is what is bearing out on the momentum pattern here down here in the RSI and the MACD. So I think I have been, mouthing on about, a significant correction coming in gold, probably back towards 1700 again. So let's see if this does materialize into that wave C down and bring us towards that 50% retracement level. Okay, let's get into the short-term count. If wave 1 is done, then we have 3 down in A, 3 up in B, not quite making it to a new high. So at the moment, this is just a flat correction, and we may have wave 1 and 2 of C now in place. So if we move sharply lower again today, that would be viewed as wave 3 of C. And again, I'm kind of looking for a decline, extended decline in wave C, probably back towards 1720. Maybe even dip into about 1700 to complete wave C. So let's see how that goes over the next couple of weeks. Over the next week, I suppose. Okay, so here's the 4-hour count in crude oil. Haven't ruled out this alternate here at all yet, but I will point you to the fact that we have a 3-wave pattern higher pretty much done today. Maybe it'll complete Friday. I'm not sure. So what's happening here then? We could have wave 1 and 2 and wave 1 and 2, depending on how you want to look at it. That's what I have gone with on the hourly count, but also on the 4-hour count, you could say, let's move this alternate count here out of the way. Still valid, by the way, but I'm not concentrating on it right now. We could have wave 1 and 3 waves up in wave 2 now in play. So let's get that over here. You can see how the pattern is kind of unfolding here. It is a nice impulsive decline. We may have an overall wave 1. We do have 3 waves up, so it depends on the degree to which this comes in at here. I'm going to suggest if we rally back towards $83 again, I'll go for this count, this wave 1 and 2 in green. If we hold, let's say at the current levels, we've hit the 200 MA on the 4-hour count here. So this has proved to be, over the last month anyway, a barrier to any rally. So let's see if we reject the 200 MA and we move lower again. It might suggest that wave 3 of 3 is underway rather than, a larger 1-2 pattern here. Let's get that into the. Come on, you. Let's get that in here. So this would be let's say the immediate alternate count here would be wave 1 in green and 3 waves up in wave 2. So if we challenge $83 again, the high comes in at 83.28, let's say 83.30. If we challenge that level, then I would switch this immediate alternate count here. So it'll still be 3 waves up, a higher degree wave 2, and then we'd expect a decline down to wave 3 anyway. So that's what I would be looking out for next week. We do have 3 waves up. I'm not quite sure if this wave 2 is complete or if we're going to switch to this alternate count wave 2. We'll know pretty soon, I think. We'll know by early next week if wave 3 is underway. By the middle of next week, if wave 3 is about to begin, then by Wednesday next week it should be underway. So that's kind of something that you should kind of keep an eye out for. Okay, with that in mind, let's move on. This is the S&P. We've moved down quite nicely this week, out of a solid corrective pattern that I've been watching for the previous month. 3 waves up, spiked to a high, hit the 78 retracement level, and then we've given up so much already. So it looks like, again, whichever way you want to view this, if you want to view this as the 1-2-1-2 pattern, or overall at the higher degree, wave 1 blue and ABC, wave 2 maybe running flat correction, it's kind of up to you. At this point in time, I might suggest something even different for the alternate view. So let's get this here, and you go there. It might be a larger 1-2 pattern. So I'm not going to rule this one out either. So let's say the most pressing count right now would be the lower degree count here, which would suggest that a third of a third of a third is coming our way pretty soon. And let's say this week's action might favor that view. I'm kind of no, I'm not so heavy on the mic there. I'm probably in the camp that that says that it does favor that view right now. Now I'm kind of splitting hairs here between here and the Dow count. I've got 5 waves down. It might be an expanded flat correction wave 2, or wave 2 might be complete already at this 38.92 high. We didn't make the 38% retracement level. You know, which might be indicative of the kind of growing downside pressure here. But let's say Thursday's action does suggest, in favor of third wave now underway, like I said in the Dow. So let's say if we move sharper today, if we move sharply lower today, that will suggest that wave 3 in pink is already underway. Let's get we need a label on that. Wave 3 in pink. Hang with me here. Okay, so that could be like wave 1 and 2 of wave 3. So if we move sharply lower, that'd be wave 3 of 3 of 3 of 3, which could get very hairy very quickly. So let's see how that works out. I'm just keeping in mind this main count here today. So if we challenge 38.90 again, then this main count has been validated. If we reject that level and we move lower quickly, then wave 3 is already underway. So let's see how wave 2 and wave 3 turn out over the next day or so. Maybe by this evening we'll know that. I don't know, but trading volume is probably going to be quite subdued today and Monday. Market will open again on Tuesday, but I'm not sure there will be a whole lot there either. Next week might be a pretty weak trade, but if that's the case, then maybe we might build some momentum to the downside. We'll see. Last year, the market topped out, January 1st, I think. So maybe we'll move into an acceleration down in wave 3 on January 1st this year as well. Who knows? And then China will launch its war in Taiwan in February. Hey, why not repeat? Why not repeat what you call 2022 in 2023? The world's gone mad, but we knew that already. So what's that going to do? Okay, let's hunt for a second wave high, and let's see if we turn lower pretty quickly next week into a third wave. That's what let's say that's my baseline outlook here. Silver has kind of stumped me recently. I don't really know what else to say about that except, I think this 3-wave pattern higher in a 4th wave is still solid, even though we have, tracked, we have extended that 5th wave within wave C. I'm going to draw attention to this Fibonacci grid here, this Fibonacci extension. So we have wave A extended off the wave B low, and that gives us a price target of 23.99. And we punched above that, and we had it lower this week. So wave C has reached 162% of wave A. It remains to be seen whether we, move impulsively down. I think the ending diagonal pattern here is pretty good. It's a good explanation of the price action. We shall see. I would suspect that if the market turns, if the stock market turns down, if risk assets turn down pretty heavily, if the dollar rallies like I suspect it probably will pretty soon, then I think silver may move down into that 5th wave pretty soon as well. If this count is correct, and if it's going to be a 5th wave and not a 2nd wave, I mean, if this is a wave 1 and we come in like I'm suggesting in gold, we have a wave 1 and 2 pattern unfolding in gold. If this is a wave 1 and 2 pattern, then I think we'll probably still fall, back below $20 again to complete a possible alternate 2nd wave. But I'm still favoring this 5th wave, and we fall towards $17 again. If we do, that'll be the buying point of a century probably in silver. But anyway, suffice to say, I'm going to leave this market to kind of do what it's going to do. It's been chugging along to the upside in a possible ending diagonal pattern. The confirmation of this will come with a very sharp acceleration lower. So let's see if that comes next week. Bitcoin. Let's move on to Bitcoin. We seem to have kind of, let's say, unfolded lower again this week, and we are revealing further weakness in the pattern in Bitcoin. If this 1-2 pattern is correct, and this is a 1-2 pattern also, and this is a 1-2 pattern down here over the last, let's say, 2 weeks, then it looks like we're going to see a further crash in Bitcoin pretty soon. This is the hourly count. You know, it's funny enough, this is going to mirror what happened, or what happened in Bitcoin here is going to mirror somewhat significantly of what may happen in silver. So we have that ending diagonal pattern in silver. You can see here in Bitcoin, we had this ending diagonal pattern. You know, everybody was turning bullish in silver again, or in Bitcoin again. And then suddenly, out of nowhere, came 5 waves down. And we bottomed out around the second wave of the previous wave C rally. So let's take that as a model, and we go into silver here. The second wave of the previous wave C rally comes in at 20.55. So we could lose, you know, $4 here pretty quickly in wave 1. So let's you know, translate that. That's pretty. That's a wicked decline. We lost in Bitcoin here. What happened? We topped out 18,320, and we bottomed out here at 16. So we lost $2,000. You lost. You know, people who were following Bitcoin lost $2,000 pretty quickly, and we're tracking in a correction higher again. So watch out. This could be a, you know, a fool's lower high, ABC higher in wave 2. Which will lead to an acceleration again in wave 3 of 3. So please watch out for that. So next week I'd look for a, let's say, a confirming lower high in wave 2 and then acceleration lower into wave 3. I'm going to move on to the NASDAQ, and we're going to complete this. So what I have been saying to you, suggesting on these videos over the last, you know, few months, is that we had a wave 1 done, and we're working higher in wave 3, or sorry, wave 2, in a 3-wave pattern, wave 2, and that wave 3 was coming our way. And hey presto, we worked higher. Now that final C wave did take, you know, some kind of, you know, false new highs to complete, but we did actually complete a C wave in wave 2, and we plunged this week into begin wave 3. So I'm going to suggest to you that the NASDAQ is lining up to be a pretty dangerous market right now. Depending, you know, on the short term, we could have wave 1 and wave 2 yet to come. We'll see how that goes, but actually, there's a couple of ways you could view this. You could view this as wave 1 and 2 of 1, and if that's the case, then wave 3 of 1 of 3 is coming our way this week. Either way, I think this pattern, you know, we've got a 5 waves down. It depends on what degree you want to view it at. Mainly, I have been kind of running with the 1-2 pattern here in pink. So that's a minor degree. You know, this sub-minor degree, I'll just use it to count the internal waves. So we're looking at a 1-2 pattern out of a 3-wave correction higher in wave 2. We all knew, if you're watching these videos, you knew that high was coming, and you knew that this pattern would turn lower, and it has. Now we need the acceleration lower to confirm the larger pattern, and I think that's coming our way pretty soon. You know, it doesn't really matter, you know, how you want to view this the degree of this initial decline here. A third wave is coming, and that's what that signals. So that does it for this week's video. Thank you all for watching, and if you're still here, I'm going to give you the reason for the season. This is Christmas, Christ, Mass. That is, the word Mass comes from the word messi. I think it's the Latin word messi means to be sent. So Christ, Mass is Christ was sent. Messiah, Christ is Christos, is the Greek for Messiah. So Messiah sent. Christmas is Messiah sent. So that's when Christmas is when Messiah sent. So that's why the reason for the season is Messiah was sent onto planet Earth to pay for our sins, and he did that on the cross. Adam destroyed our relationship with God as a creation, as a created entity that is humanity. Adam destroyed his dominion, or his relationship with God, gave it over to the dragon, gave it over to Satan. And Jesus came back and bought it back with his life. He paid for it. He paid for the sin. He paid for all of sin. And all you got to do is admit you're a sinner and believe. If you have committed, like I have, I've committed plenty of sin. If you've missed the mark, if you've committed a sin means missing a mark. If you stole a sweets when you were 15 from a shop, or you wished bad, you wished ill on someone, in any time, that's a sin. That's missing the mark. So you cannot, unless you've lived a perfect life, and no one has, all have fallen short of the glory of God. Unless you've lived a perfect life, then you need someone to pay for your sin. And that's what Jesus did. He paid for our sin. And I thank God for Jesus every day. He paid for my sin. And that means that we're clothed in the righteousness of the Messiah. You're not wearing your own righteousness anymore, your own lack of righteousness. As you approach, eternity, as you die and you go off into eternity, you're not wearing your own righteousness. If you're a believer in Messiah, you're clothed in his righteousness, because he lived the perfect life and he died for your sin. He paid for it as an offering. He was a free will offering. All the Jewish traditions, the Jewish laws, the law, the Torah, Moses' law, was all fulfilled by Christ, because by Messiah, he was the free will offering. He was the Passover offering. He makes death pass over you. He paid for your sin. He was the free will offering to pay for sin. He was the sin offering. He's everything. God created. He sent Messiah into creation. God is Messiah also, but he sent Messiah into creation in order to pay for that sin, in order to bridge the gap between humanity and God again. And the devil is going to try and break that idea in your mind so that you can never come to salvation. But the simpleness of salvation is accepting Christ, accepting the payment that was made on the cross as a payment for you, and saying, thank you, Jesus. Thank you for paying for my sin. I accept you. You did it. Jesus was born as a human on planet Earth. Do you know that there's more evidence for the life of Jesus than there is for the life of Caesar Augustus? So whatever you want to say about there's no historical evidence, there's more historical manuscripts about Jesus and his existence than there is of one of the most famous leaders or historical figures ever. He's not even, but one of secular humanity's heroes, that is Caesar Augustus. There's more evidence for Jesus. Jesus here, he died, he came here, he died for your sin, and he said it's finished at the end. So all you do is you have to accept and believe and confess to God. Say, Jesus, I accept Jesus as my Savior. That's confessing to God. And then you will be sealed with the Holy Spirit. You're sealed. If you believe, you're sealed. Believe in Messiah, you're sealed with the Holy Spirit. And your ticket into heaven has been paid for by Messiah. So that's all. That's all I wanted to say. Christmas is a recognition of that, whether the day is right or not. I think the day is probably quite close to the conception, conception within the womb of Miriam. So I'll celebrate Christmas. I celebrate the fact Messiah came to earth and paid for my sin. I celebrate that all day long. I hope you join me in that. And if you're still here, you've heard the gospel. It's up to you. The gospel is the good news that Jesus paid for your sin if you want it. It's up to you. If you don't want it, that's up to you too, because many people just don't want it, don't want to hear it. Which is a shame, because there's a place for people who don't want the gospel too. That's called hell. It's called eternal separation from God, and that's a choice too. So, all right, have a great Christmas, and I pray the blessings of the Messiah upon all of you. And I will see you on the website pretty soon. Maybe tonight. Okay. God bless, and I'll see you next week for another new video. Bye bye.